Gambling has gotten a lot of attention in the last couple of weeks because of Robinhood and Reddit and GameStop. Everybody from congressional lawmakers to Charlie Munger are comparing trading to gambling. I'm wondering whether you see Robinhood as a competitor.
I definitely don't see them as a competitor. It's not gambling in terms of how it's regulated, of course. I think people can argue whether there's similar dynamics in the way some people use the products. I think most people still trade and buy stocks for long-term wealth creation, not for recreation and entertainment. But, certainly I think there are some that might, but we don't see it as a competition thing. We see it as a completely separate product.
You had a really incredible quarter with a beat on both the top and bottom line. In part, you say because of this whole work from home environment and people had fewer options for their disposable income. Do you think that changes once the economy starts picking up again in all sectors, once people start going back to work, once we're not so concerned with the pandemic and protection?
Well, first, thank you. And, we did talk about this a bit on the earnings call. As we thought about our guidance next year, we did build a bit of conservatism into the back half of the year with the expectation that there may be some softening of some of the tailwinds that we've seen. Now, it's hard to determine what was actually driving some of this real increased momentum we've seen. I think certainly the industry itself is picking up momentum. We have come, a long way in terms of optimizing a lot of our marketing and product. But you have to, think that at least a good chunk of it was coming from some of this pent-up demand with no sports in Q2 and late Q1, a lot of the stay-at-home nature of the pandemic, as well as the fact that, potentially hundreds of billions of dollars of consumer spending and other sorts of entertainment and leisure categories like travel and dining out have really gone, away in those sectors and those categories. So I have to imagine some of that is what's been driving this incredible response we're seeing to our marketing and really strong activation and revenue on our customer base. And that's why we built a bit of conservatism into the back half of this year, I should say, with the expectation that we might see people, start to get back to some of those other activities.
Conservative, but you raised guidance from what it was previously by about $100 million. And you said, look, part of the reason why we delivered or overperformed on our core business is because there was luck on your side, better holds, and Illinois extending the opportunities for customers to sign up on mobile. We now are seeing almost 20 states considering sports gambling bills. What would you tell them about the importance of looking at mobile as the potential for growth?
Well, I think we've seen this even before the pandemic, that the vast majority of betting handle of revenue is generated on mobile. It's not to say there shouldn't be brick and mortar in-person sports betting. I think that's an important part of many states' equation as well. But the vast majority of the revenue is going to come online. And I think that states are noticing that. And that's why so many of them, were only, a couple of years ago, there were many states that were considering just brick and mortar. Now there's very few. Almost every state that's considering sports betting legislation has a mobile component to it.
Shepard Smith here. Thanks for watching CNBC on YouTube.